Well, hello there, Maverick Traders. I hope everyone is going to have a Happy New Year or had one, because look at this date, 2024, another year in the books. Boy, this has been 26 years now for Maverick Trading. We've been in business, so let's look forward to a great 27th year. Let's go ahead and get started. In this session, we're going to do what we always do. We're going to take a look back, look at all the news that happened, look at some of the movements. Then we're going to basically flush everything away and look at the market. Where is it right here, right now? We're going to go through all the sectors, score everything from a +3 to a -3. That's going to tell us where we should go find our trades.
Disclaimer. This video was created for professional stock and option traders. Maverick Trading is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional trader for Maverick, click the apply button in the video description. Let's get ready for the week.
But before we get started, I really want to give one last push to the Trading Collective. Now, we've had a bunch of emails this week saying, hey, I thought you were going to send out the link. Where's the link for us to opt in? The opt-in link is going to give you a month for free. So we thought about it and we said, well, we don't want to send these out, December 25th, because then that will run out on January 25th. So we will be sending them out either with this video or on Saturday, to where everyone is going to be able to opt in. Again, you need to opt into this. What we're going to do is we're going to be trading live. We're going to be doing basket trading, just like we always talk about, and we're just going to be making these trades live. We're going to show you all the processes we go through to make the trade. On Monday mornings, we're going to have a live session where we literally are trading in the live market with these positions. Friday, we're going to have another live session because we're going to have stuff expiring every single Friday, so we're going to walk through the expiration as well. We'll be tracking this account and we're going to watch it grow, and we're planning on doing this for years and years. As always, we will record everything, so even if you can't join it live, you can always watch recordings of it. So that Trading Collective invite will be going out this weekend to everybody. Let's look over last week's numbers. We had a bullish market. It wasn't as bullish as the prior weeks, but it was still a very bullish market. 4 out of 5 days were positive days. We did have the markets closed, and we are now in the period of the Santa Claus rally. The last 4 days after Christmas and the first 3 days of the new year is what's called the Santa Claus rally. It is an up period 67% of the time and goes up an average of 1.3%. We'll be talking about this today as we go look at what's likely to happen the first week of January. We've got the US dollar, we got bonds lower, we got oil lower. Everything is like really perfect right now. Interest rates are coming down, oil's coming down, the strength of the US dollar is coming down. Lots of good positive things for the market. We did have a few economic reports, and the ones that came out really weren't all that great. You can see manufacturing was weaker than expected. And then we also got Chicago manufacturing that was also weaker than expected. The markets are just shrugging this off. The markets really just do not care about this whatsoever. We do get some more data this week that is much more important. The market will likely react to that as we see it. Let's look through a couple of the trades I suggested last week. First one, we had SO, the Southern Company. Now this one was a butterfly, and it was just a 1 week butterfly for me. And it was a 69, 71, 73 butterfly. So I wanted this to go up into that range and really get right to that 71 area. It's really where I wanted to get. You can see that we did go up a little bit all week. So this trade ended up being mildly profitable for me. Not a great profit, but a decent profit. I'll take it on a 5 or 4 day trade. But you can see here, just a decent move here. We do like utilities on the sideways side still, but as we talked about in utilities, there's just not a lot of stocks in that group to choose from. Other trade we talked about was Roblox. Now, Roblox, we did a diagonal call spread. Now, the diagonal call spread, we recognize, again, this was the big candle we saw on last Friday. And we said, look, there's a lot of resistance at 47 if you go back a couple months. And we said it probably isn't going to get through 47, but we like this stock. So we said, let's do a diagonal call spread of 43.47, where 47 is going to be the max gain. You can see we backed off of 47 a little bit. This trade is still mildly profitable at the end of the week. I still like this trade to the upside, but there's no doubt that we'll probably get a couple more days of a pullback before we get a bounce. We'll have to see what happens here on Roblox. Next one, we had a bullish call on Enbridge. The stock was up for the week, but you can see we didn't break out and run. This trade still has more time. It still looks really good. We got a nice ascending triangle forming here, ready for a breakout to the upside on Enbridge. Let's go ahead and jump into the market analysis. Let's take a look at all the numbers of what everything did last week. If we take a look at the numbers, we see here that it was still an up week. Dow up 0.8%, S&P and NASDAQ only up about 1/3%. Now remember when I said the Santa Claus rally, the average gain is 1.3%. So we basically got 0.3% this week. If we end up having an average, which of course is almost impossible that we have the average, but it's saying there's still a little bit of upside left in these markets. We did see the Russell 2000 pull back a bit. That's kind of been a leading indicator for things. And oil, boy, oil just cannot get out of its own way. Was looking like it wanted to strengthen, but then came right back down into some ranges here. We take a look at the S&P chart. I want you to really just focus on the last 2 weeks, because we said over the last 2 weeks that we still think there's higher prices, but the bulk of the gains have already been made in the bag. So we said we looked at the market, we looked at the time period, the seasonality patterns, said, hey, you know what? We still have some upside left. And I said it was a very clear call till the end of the year. Well, here we are. We are at the end of the year. And I said that after the end of the year, it gets a little fuzzy. So we're going to talk about January. We're going to talk about the January effect. We're going to talk about some of the seasonality patterns that happen in January. But I think the easier gains are definitely behind us in the rearview mirror. If we take a look, so I just want to point out though, everything is still very bullish. Rising moving averages. Yes, we had a red candle, but big deal. This thing could pull all the way back to the 20-period moving average, the support line at 4,700. And it would still be a really strong market. So that's a 1.5% pullback that could happen. And I would still be extremely bullish, even if that happened. If we break below the 20, that's going to be the first sign that we want to start to get a little bit less bullish. So at this point, we have to be bullish. We have no other choice. Now, if we choose something else, it means that you're choosing your emotions. You're choosing what you think. We at Maverick say, trade the market in front of you, not the market you think it should be, not the market you want it to be. I know I've got a handful of traders that are bearish and fought this entire move higher, and they see this candle right here and they're like licking their chops like, oh, it's over. Guess what? You thought that here. You thought that here. You thought that here. Wait. Just wait. I told you in early December, if you don't want to get long and you want to be short, just wait till January. Well, here we are in January, and I'm still telling you, you've got to get confirmation from the charts. We look at the NASDAQ. Same thing. NASDAQ or the Qs could pull all the way back to 403. That is 1.5% as well. That would still be a very perfectly fine pullback in this bullish market that we see. So look, I know these candles this week, we ended up on a down note. We could see 1 or 2 more days of downside, but the chart says it's most likely going to be bought if we have any more moves down. I want to just look at the bond market. For any of you doubters out there of this market, look at bonds. Just look at bonds. And I said this last week. If I told you in November that the bonds were going to be at 3.8% by the end of the year, first of all, you wouldn't have believed me because I wouldn't have believed me. But second, you'd say, oh my gosh, I bet the stock market would have a massive rally. And that's exactly what it did. Look at this price action. It is not bouncing up. If anything, it's just drifting lower. The bond market is saying that interest rates have absolutely peaked, and that is very, very bullish for stocks. So I'm going into this week still bullish, but we have to talk about the January effect. Now, we talk about this in our trend following sessions. So I'm going to go over it, and there's lots of other studies that do this, but this is my favorite one. This is the momentum study by, well, you just read the names and we'll go on here. Basically, they said, what happens if you bought a stock and held it for 6 months? If you bought the best performing stocks and held them, so the best performing stocks over the last 6 months, and you held them for 6 more months, you were really handsomely paid off. This group here was the top 10%. And if we go down to this last one, you can see that the top 10% of stocks, they had a 1.65 greater return than the average. So the average is 1. These were 1.65. So they outperformed the market. The P10 group, it dramatically underperformed the market. So throughout the whole year, the top 10% of the stocks, they outperformed the rest of the stock market, while the bottom 10% underperformed. However, there was 1 month where there was a drastic underperformance. Take a look at the performance of this group. 4.95%. Or not percent, but just 4.95. This is what's called the January effect, where the best stocks typically have bad Januaries, and where the worst stocks typically have really good Januaries. That's what this study is saying. Now, why does this happen? Happens for a couple different reasons. First off is tax selling. If you have a large gain, you're not wanting to sell it in December, you're going to sell it in January, because that pushes your taxes off by 15 months. So if you had a big gain in a stock, and it had a really good run, probably in that top 10%, you're going to sell it in January. That's why, again, some of those best performers sell off in January as people are finally booking those profits that didn't want to sell in December. You also get what's called rebalancing, where people will look, and if something becomes too large in their portfolio, so let's say they said, I don't want to have any more than 10% of Facebook in my portfolio, of Meta. Well, Meta had a really good year this year. And at the end of the year, they're saying, oh, I now have 14% of my portfolios in Meta. I'm going to sell 4% of it. Only because they're having to rebalance, not because they don't like the stock or anything. It's just because of rebalancing. And then there might have been something in their portfolio that went down. It was now only 6% of their portfolio. And they say, hey, why didn't I put the money from Facebook into this one? So you can see the winners are sold off and the losers are bought up in this rebalancing. So look, this is just another seasonality pattern. It doesn't mean it happens every year. It happens some years. But what I'm going to be doing, and then what I do every year, is I avoid the top 10 and bottom 10% of stocks. So I do not go short something that's had a very, very bad 2023 or whatever the last year was. I don't go long the best performers of 2023. So I play somewhere in the middle. Now look, this is a little overly paranoid. Sometimes it helps, sometimes it doesn't. But I understand the January effect, and I will just go play in other places. So for January, I won't be trading things like the Nvidias, the Metas, the things that had really big gains, and I won't be shorting the really beaten down ones. I'm going to be playing somewhere in the middle. It's just to try to keep me a little safe from these seasonality patterns. I do want to point out, we are still in the Santa Claus rally, period. This week, the first 3 days, so Tuesday, Wednesday, Thursday, those are going to be probably up days. So I'm going into this 2024 still very bullish. We take a look on the schedule. We've got 2 big things, well, maybe 3. The JOLTS job openings, which have been dropping from 11 million to 8 million. That's been something the Fed has pointed to. We also get manufacturing down at 47. 50 is growth. Above 50 is growth. Below 50 is contraction. The manufacturing sector is in a little bit of a decline. And then we have payrolls. We've got non-farm payrolls. These are now back to normal numbers. Ever since COVID hit, we had ridiculous numbers. Losing 4 million jobs, gaining 2 million jobs. Like, the numbers have been ridiculous. The average has been about 200,000 jobs a month. That really, what I've heard economists say is somewhere between 150 and 200,000 jobs is just simply keeping up with population growth. We're finally back to a normal number for payrolls. It looks like 168 last month was 200,000. This is back to normal. So we'll have to see what happens when that comes out. But definitely a little bit better or bigger economic news than we had last week. Did anything change? No, nothing changed. I know that the calendar changed, but guess what? It's just a construct of your imagination or what we do as a society. What happens on Tuesday when the market opens up, it doesn't really know that the calendar flipped over. It was in a good mood. People are in a good mood. People think the economy's doing well, and people are willing to put money to work in the market. Yes, at the first of the year, sometimes there's some new money earmarked that goes into the market. There's rebalancing. But for the most part, nothing has really changed. So I've got to stick at a +3. I have to. I don't have a choice because that is what the chart tells me to do. Let's go ahead and take a look at some sectors. All right, the best performing sector last week was healthcare. Healthcare was the best. What was the worst? Consumer and energy basically were neck and neck with who was the worst. Other than that, everything was pretty much solidly up a little bit. Comm services took a little hit. But let's go in and take a look at all of the charts on the ETFs, and let's give them a score from +3 to -3. Up first is utilities. Utilities is trapped between the moving averages. Whenever that happens, that gets you a big old fat 0. That's where we are on utilities, and that's where we were last week. Next, looking at communication services. Now, one of the things I really want you to pay attention to is, did the sector break above last week's high? So you can see here, we did get a decent week out of communication services. Yes, I know we got a reversal candle here, a little bit of reversal candle here, followed by a confirmation here. We fully could get a couple of down candles next week. That would not surprise me whatsoever. But there's nothing in this chart that says that you should not be a +3. This is a +3. Could be a pullback. It just gives you a good buying opportunity in this sector. Next, moving to real estate. Last week it was a +3. This week's a +3. However, I did want to point out, did not really break above the high. So I want you to really take advantage of looking at these +3s because pretty much every sector is a +3. So now we're like, okay, is this a +3 plus? Is this a +3 minus? We're going to try to differentiate between which one is actually the strongest here. So still a +3, but we didn't make a new high. But you still have to be very bullish on it. Here we have healthcare. Healthcare was the best sector last week. Did we make a new high? We basically closed at the high. Give me one more candle above that, and I'll put this at a +3 plus, but it's a +3. Just a flat old +3. Moving on to the industrials. Take a look at industrials. Moved above it. Moved solidly above it and held above it. I can't give this a +4. It does not work on our scoring system, but this is a +3 plus. So for me, industrials are looking really solid here. Up next to financials. Now, it's hard to say that financials made a new high, but boy, it was knocking on the door all week long. And Friday's candle was still above the low of Thursday's candle, unlike a lot of other sectors. So while this one is a solid +3, is it a +3 plus? It's one of the stronger sectors though. Up next to consumer. All right, now take a look at this one. This one failed to make a new high, and then we had a pretty serious sell-off in this sector. Now look, we're still in this base, but when we take a look at all of the +3s, and that's what this one is, this is a +3. This one's looking not as strong. So I would give this one a +3 minus. And consumer, if it slips any more, it might even go down to a +2 next week. Here we have another sector that ended up going higher than the prior week. So we've got to give this one a +3 and a +3+, looking a little stronger than the others. Here we have the basic materials sector. Basic materials sector also was able to go higher. It didn't really hold on to it. It's come back down. But when we're taking a look at where to put some money, materials looks like a better place than consumer for sure. And then energy. Energy was a 0 last week. It's been going from -2 to -1 to 0, and it's just fallen back down to a -1. So it's really just staying weak. So when you take a look at the only sector in this market is energy. Energy is the only sector that's looking 0 to -1. Other than that, this is what we have. We have a bunch of +3s, but when we take a look at which ones are the best ones, we've got to say that the industrials look good, technology looks good, and financials. These three look the best of all the sectors here. So with that in mind, let's go in and do a couple trades. And again, with the January effect, I am going to be focusing on trades, not the best winners of 2023 and not the worst stocks of 2023 for my bears. I want to play more in the middle here with the January effect.
Have you been trading in the markets for at least 2 years? Are you starting to see some decent progress? Is that progress so small because of your limited account size? Maverick Trading is a prop firm that provides capital to profitable traders. You trade a minimum $25,000 account and keep 70 to 80% of the profits. After 2 consecutive profitable months, you move to a $50,000 account. As you keep progressing, you will be able to trade 6- and 7-figure accounts. To learn more about trading for Maverick Trading, either click on the Apply card in the top left, click Apply at the end screen, or click the link in the description to watch our recruiting video that explains more about Maverick and prop trading. If you like what you see, apply for a position and meet with our recruiters. Are you our next trader?
Let's start first in the real estate sector. All right, this is Health Peak Properties. Now, this is a stock that has recently started to have a run. Remember, the market bottomed out a little bit earlier than this one. This one has been playing some catch up for sure. Just a really nice high base. And the reason I really like this one, it's right at a strike price. The 20 strike price is going to give me a lot of options on how I play this with some spreads. So what I'm really liking here is this diagonal call spread. It's a little bit longer dated that I like to go out. But in the real estate sector, this was my favorite one. So the January 1750, sell that January 20. If it stays around here, it's going to be nice. If it takes off and runs up to 21, you're still going to have a nice gain on this trade. So I just like this one just to either hold in or move higher over the next couple weeks. Right, going next into healthcare. Healthcare was the best performing sector of last week. And this is one of my favorite patterns. As a younger trader, I would have never, ever have dared to trade this stock because, I was always looking at things like, oh my gosh, look how much it's run. It was $68, now it's up to $78. And boy, we haven't had any significant pullbacks here. And look how far away it is from the moving averages. So I would talk myself out of these trades all the time, and they ended up being the best trade. So I finally said, hey, Rob, you identify this pattern, and this is a pattern that I call the high and tight base, and it's typically 5 candles. Look at how tight these candles are. This stock, it had a huge run, an enormous run, and it's just pinned. It's absolutely pinned. It's just tired. These things rarely ever get back to the moving average. They typically make another run like they just had. So I like this one quite a bit. So the big question is, how do we play it? Well, let's take a look at possibilities. You could just do a straight vertical, which would be the 78.81. So again, up to the 81 target, which I think is very, very reasonable. Or I'm going to be doing this one here. I love my diagonal call spreads because on January 5th, this 80 call will expire. If this stock moves up and let's say it's at $79.75, I'm just going to let it expire and I get to hold a long call with a great cost basis in case we get a further run and this thing runs up to 83, 84, 85. Then I can do another diagonal on it with the January 12th. Again, I just love these diagonal call spreads because they give you the ability to each week take a look at the trade and analyze and say, hey, do I want to make this more bullish, less bullish? How do I want to handle this? Next up is industrials. Industrials is my favorite sector right now. It's looking the strongest. So again, I wanted to find something that hadn't run. I really liked the Boeing chart, but pull up the bullet. I'll throw up the Boeing chart right here. I love this chart. I think the stock is going higher, but this is one of these that we could get the January effect on. I mean, look at this rally we've seen. So I want to go to the middle. I want to go to the middle. I don't want the top 10%. I don't want the bottom 10%. I'm looking for stuff in the middle. Here's this Emerson Electric. It's turned around later than the market has. And you could see we're just really high basing here, just hanging out in this area. We've got 100 up here on the chart. So the big question is, where does this thing go? This thing probably works its way up to 100. 100 is going to be my target for the January expiration, the monthly expiration. So the question is, how do you play it? Well, as we all know, there's a bunch of different ways to play it. You can play it with just a straight vertical spread, which is the most simple, the most easy, the 96-100. You're going to pay about $1.60, and you're going to have $2.40 as a possible return on this one. But if you like diagonals like I do, this is what I'm going to be doing, just selling the 98 for Friday, and then I will reevaluate this one on Friday to see if I want to make this more bullish, less bullish, or just get out of it altogether. Emerson Electric, high base. All right, moving next into consumer. So look, I've been very bullish for the last 5-6 weeks. And I'm maintaining my bullishness. But at some point, it comes very difficult to find bearish trades. And that's where we are right now. The market is so bullish. And in fact, let me pull up FinViz and show you that 82% of all stocks are above their 50-day moving average. That's a huge number. So there's no question that, hey, we're probably getting to the end of this run, or maybe there's some percent left. So I think it's prudent to still do some bearish trades, and I'm picking the consumer sector because of all the sectors that weakened this week. It was the consumer sector that really weakened the worst. So while consumer is still a +3, it's the one that weakened the most. So I'm going to be using this as a possible bearish trade. So I came across this on the screener, ON. I have never traded this stock before. Beautiful little low base. And again, see what it's done here. It hasn't really outperformed. We came down, set this little low base here. I'm looking at this low of like 25 right down here. I think it's very possible we could sink down there. That's only, I guess that's 2 points away here, about 10%. But I'm looking at this one for just a little short. I got to have some shorts in there just in case the market does turn over. I don't get absolutely killed. I don't want to be all bullish. So I'm looking at the January 12th. So that's 2 weeks out, the 25.28. And that's going to be right in this area, 25.28 spread. If it goes down any lower here, that's definitely going to be a nice profitable trade. And below 25 is going to be max gain. I don't think it goes below 25, but we'll wait and see. ON in the consumer sector. And then lastly, let's take a look at the energy sector. It's also a sector that I think is ripe for bears. And they've had nice little bounces. Oil had a little bit of recovery back up to the high 70s, and then it just turned right back down. So a lot of these stocks had nice bear rallies, and that's exactly what this one has had. So if we take a look at Range Resources here, we had this low down here at 28.50. And then you can see we had a nice rally up to 31. Now let's just do the math. That's a 6-point gain on a $25 stock. That's about a 23% bear rally. Heck yeah, I love that. When the weakest stocks have a 23% bear rally, I love these, and you can see we've already got our nice confirmation candle here. Reversal, reversal, confirmation. I think this one's ready to go. Now look, this is a +3 market. So in +3 markets, you can't get super bearish. There's no reason for me to think that this stock is going to go make a new low down at $27, $24, $26. I'm thinking I need to look in here, like this area. I need to be like, hey, I think it goes down to here. That's it. If we were in a more bearish market, I'd get much more bearish, but this one's got to be mildly bearish here. So I'm looking at the 29.31, and I'm looking for just 1 week. I've got a lot of bulls right now, and I've got very few bears. I need some bears, so I'm putting on something short-term this week. And again, it's the 29.31. So this is the spread I'm looking at. And look, even if it doesn't get to 29, I don't care. It's going to be a positive trade for me. So again, looking to find some bears. They're definitely hard to find in this market, but you got to go search for them. All right, if you have any trades you want to share with the rest of the Maverick group, you guys know where to go. Log in to the members area, jump into our forum. Love to see the discussion between our traders. Wrapping this up, the market's still bullish. Look, I know we had a weak close on Friday. I know it. And look, it could easily carry over a little bit. But when you are just looking at technical analysis and you're forgetting about all the things you've seen on TV, all the things you've read. And I always love to say this. Imagine you woke up from a coma that you've been in for 10 years. You don't even know who's president. You don't know anything that's happened. And someone shows you a stock chart and you say, oh, this is what I think you should do. That's what you should do all the time. You should have that kind of just clarity with what the chart says. We could easily have a little pullback. Yes, the chart on Friday indicates, okay, maybe we get a couple more down days early this week, but I think you still want to be overly bullish. If this market goes much higher, I think we're going to get, again, closer and closer to the end. But if we base here, I think it's setting ourselves up for another rally higher. Remember the January effect. Sometimes it happens, sometimes it doesn't. I always just play in the middle in January. Like I say, I ignore the top 10% of stocks and the bottom 10% of stocks, and I play somewhere in the middle with other just regular boring trades. I think it's a good idea to do that. The Trading Collective starts this week. We will be sending out the invitation. I'll send it out with this video, and I'll also send it out on Saturday with more information. You must opt in. Once you opt in, our first session is going to be Tuesday night. The first week is going to be me going over the rules. This is all rules-based. I've got 7 other traders that are going to be swapping in with me every week. We're going to rotate trader to trader. So we all have different trading styles. We all got on the same page and said, no, these are the rules. Everyone is going to trade one specific way. So you're going to be able to watch us come through, make trades, again, document our process of how we found them, why we're even looking for them. It's going to be really cool. So opt into that, and then you can decide at the end of January whether there's something or not you want to add permanently. All right. Thank you very much. Everyone have a very, very happy New Year's if you're hearing this before New Year's. Be safe, everybody. If you're hearing this after New Year's, Happy New Year's. And thank you so much for a great 2023. It was one of our best. Looking forward to another year of 2024. Goodbye, everybody.